Okay folks, welcome back to Pete's Investing. It's April 8th, 2024. This is the market analysis for the Aussie New Zealand, Aussie US, Euro US, US Canadian and US Japanese yen. Just be careful, there are a few retraces and resistance areas to look out for, or otherwise we're bullish on all these currency pairs along the monthly, weekly and daily trends. Here's that heat map, and you'll notice here on the right side what some FOREX pairs, and today we're covering, as I said, the Aussie New Zealand, bullish along the monthly, weekly, daily. Likewise the Aussie US, Euro US, US Canadian and US Japanese. They're the other instruments we cover on other videos as well occasionally. So first looking at the Aussie New Zealand, this is the daily chart and the 1 hour chart. Now what I want to emphasize, I'll show you very briefly on the Aussie New Zealand as an example. We say that its monthly, weekly and daily is bullish, and that's based on this CCI 150 above the moving average bands. So here, for example, on the Aussie New Zealand, if I go to the monthly chart and zoom out, that's bullish. On the weekly, likewise, strong bullish movement. And on the daily, which we're analyzing today, that's also bullish. Now notice it's actually pulling down, and we do use this CCI as a predictor of where the price may go. For example, back here we had a bullish divergence on the CCI 150, higher lows versus lower lows on the price, and the price retraced from there. Sometimes it just retraces a small amount before continuing to the downtrend. In this case it continued well above the 100% level of that previous high. Now notice as well we've got the ADX 25, which helps us support that bullish movement on the daily, and down here we've got the stochastic market forecast indicator, which is showing above the 50 level, which indicates a bullish movement as well. When it's below the 50 it's generally bearish, so at the moment it's bullish on the daily in this case. But again, we use the CCI 150 as a primary trend indicator. On the hourly, before I zoom in, I'm just showing you here the stochastic market forecast is in the overbought territory, so just be careful of a retrace. Now in support of that, sometimes it can stay well above there and the price can continue moving higher. But in terms of where we are as well, zooming in, you can see here we've got almost double top on the CCI highs there versus higher highs on the price, and that's a bearish divergence. So long as the CCI remains below that entry point there, you can see that's falling off as well. We're going to consider that a bearish divergence. If that CCI rises and breaks higher than that, then it invalidates the divergence. What we do as well, we also look at a minimum retrace level. So we'll take it back to that low. Actually might have been. So the initial area will be that 23.38%. I think I drew this going back to that point there. Or was it down here? Yeah, maybe I've misdrawn that. So let me just pull that up. And I'll bring that up to that level there. So that'll be our minimum retrace level. So that goes from that low to that high, and that'll be our minimum retrace. Of course it can go a lot lower, and if it breaks lower than 61% as a general rule, that's a very bearish outlook on it. But at the moment, you'll notice we are also bullish on the CCI 150, so predominantly bullish trades only should be taken. So again, during this period, you could have traded here on the daily, of course, but I like to use, let me just get rid of this Fibonacci to make it cleaner. So for example, during this period, when that's bullish, you would have taken long trades. During those, and what I've done here is this indicator here is showing where the CCI 150 is above the moving average band, it's green. When it's below the moving average band, it's red. And when it's within the band, they're white. So you would have taken all the green, or when the CCI is above the moving average band, you would have taken those long trades. Just as a trading idea for you. So permanently bullish on the Aussie New Zealand. So keeping that in mind, again, the Aussie US is bullish on the monthly, weekly and daily. And here we've got the daily chart for the Aussie US. Again, the CCI 150 is above the moving average band. If I zoom out, that's actually below the 50 level, so just be careful. It's actually the CCI 150 is showing bullish on monthly, weekly and daily, so that's giving us a bit of a mixed signal there. But again, I still consider that a bullish movement. And here you can see there the CCO and the stochastic market forecast indicator is breaking just above that 50 level. So it might be a fresh breakout to the upside. There's no divergence on the CCI and the price on the daily. If I zoom in on the hourly, currently there's no divergence there as well. That's all moving in line with the price. There was a bullish divergence there, higher lows versus lower lows on the price, and the price actually bounced. Had a bit of a false break, then it bounced a lot more aggressively. Another bullish divergence there. That's the Aussie US. The Euro US has got a similar pattern to the Aussie US. Again, it's bullish on the monthly, weekly and daily. You can see here the CCI is just broken slightly above the moving average band on the daily. The ADX 25 is giving us a mixed signal. Again, that's showing a bearish signal, but we predominantly use that as a trend indicator. And the stochastic market forecast indicator is fluctuating around the 50 level. So just be cautious about going too aggressively long. On the hourly chart on the Euro US, again, sorry, before I zoom in, notice there it's actually broken up just past the 50 level, same as the Aussie US, but it's retraced back down to the downside. And that's giving us a potential, it's currently showing short on the 1 hour chart. So just be careful about, wait until that breaks more above the moving average band to go long. So again, you can see there, there's more movement to the upside when there's in alignment with the monthly, weekly and daily charts. There's no divergence currently. There was a bullish divergence there. I haven't drawn the trend lines, but you can see there, lower lows on the price, higher lows on the CCI 150, and it bounced quite strongly from there. Next, the US Canadian dollar. Again, zooming out on both the daily and the hourly. They're both above the 50 level on the stochastic market forecast. This one is more in the overbought territory. You can see that it's currently trending in that band between those ascending diagonal trend lines. On the daily, if I zoom in first off, you can see there it's broken above the moving average band of the CCI 150. And on the hourly, that's pretty much neutral at the moment on the hourly, so just careful about going long. And again, applying the same principles to trading using the monthly, weekly and daily trends and trend in that direction on the smaller time frames. And lastly, we've got the US Japanese yen. So again, on the daily, you can see there it's pretty much moving sideways on the daily, even though it's just slightly above the moving average band, hence showing a bullish movement. Although it's hit this major resistance up here at 151.90, and it's been sitting up there for some number of days now, so just be careful of it breaking to the downside. I'd like to see that break above that resistance area to be more bullish. On the hourly, you can see there it's in the overbought territory, so just be careful again. I'd like to see that break higher. If I zoom in, there's no divergence to talk of here. That CCI is moving in line with the price on the daily. On the hourly, okay, zooming in, you can see there, that's just a very quick example. There was a bearish divergence there along those highs on the CCI versus the same periods there on the price, and actually fell off, and then it broke pretty much down pretty severely on that point there. There was no divergence back there, or was there? There was one here actually. You can see there, that's actually going back there between those. Now that would have been a tricky one to trade because there was a double top there versus they're not always clear cut. So again, I would have gone down to, in this case, the CCI kept below that point there. You can see there, then it fell off. So that would have extended to that high there. And what I would have traded, not necessarily traded, but the way you would have potentially looked at the retrace level. If I zoom in, again, between that low and that high, and that low is the previous low, significant low before the divergence started. You can see there that minimum retrace level would have been at that 23%. From there down to the 38%, and that's where it hit the target. Notice the CCI kept falling off. So again, you can see there it's actually still falling off until it recovered back up into that level, and now we've got a new divergence. So just be careful. There are ways of, you just got to wait for these to play out. Sometimes for that to have failed, you would have seen the CCI break higher than that entry point there, in which case you probably would have seen the price go much higher through that resistance as well.
To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.